welcome. You're watching Market Drop, a weekly update on equity markets and outlook for next week with Mr. Pankaj Pandey, Head Research, ICICIdirect. Very good evening, Pankaj.
Hi, good evening, Geetu.
First week of Samvat 2079 turned out to be very good with benchmark Nifty now moving towards new high, towards the 18,000 zone, holding well above 17,800 levels. How do you expect the markets to behave next week ahead of the crucial Fed meet and also now RBI having a one-day meet on November 3rd?
So I think one is Indian markets have been relatively far more resilient compared to what we see for most of the global markets. So obviously we are doing a lot more better. I think any kind of a positiveness coming from the Fed or any relief or less tightening or any softening of stance is going to be positive for our markets. I think the other positive is that the dollar has stopped appreciating. So from that perspective, it's a relief for the emerging markets. So combination of all this, our sense is that markets will inch up closer towards 18,000 kind of a levels. And subsequently, markets are headed towards new high. That is what we have been believing, and that is what we would want to sort of continue to maintain that stance. And I think since we are still in a sort of a result season, so you'll still see stock-specific moves panning out. But overall, I think the bullish bias in the market continues. This week, markets have been relatively better. Both Nifty and Bank Nifty have gained over 1%. So
Right.
largely, I think whatever weakness or volatility we are seeing, that is not getting reflected. And our sense is that if there is an improvement in global macros, I think it will have bit of a positive rub-off on our markets.
This week, if we talk about the metal space, that has given a good bounce back. Is it here to stay sustainable?
So one is obviously commodities do benefit whenever the dollar sort of declines, and which is also happened in cases metals also. One is domestically we are seeing prices being or slightly higher. So steel prices are up about 1,500 rupees per ton. And when we sort of look at the recent commentary from JSW Steel numbers, one is the coking coal prices, which were somewhere about $380 per ton, is expected to come down to about $300 per ton, so about $80 kind of a relief. So obviously that
Right.
is added positive. But in general, if there is a lesser global hawkishness because of change in stance or moderation in stance by central banks, obviously there is a little chance or a relatively improvement in the overall recessionary scenario fear which has sort of cropped up. I think more than inflation now, it is a recession which is sort of causing a lot more alarms. So any kind of a softness in stance will have a positive rub-off on metals, and I think we have already seen JSW being one of the better performing stocks this particular week, despite poor set of numbers. I think something similar can still pan out because our sense is that if there is some bit of a slight moderation even in stance of US Fed, I think overall we could see metals participating overall. So from that perspective, metal could see some bit of a relief bounce.
On November 1st, we have auto sales numbers for the month of October, and October has been a festive season. So, what is your expectation from the volumes that we could see from the auto companies this time? And if we talk about the weak performance of the auto companies, M&M has been doing well. Maruti topped the list of gainers for the week. So, how do you expect the coming weeks to pan out for auto space?
So one is, I think last month auto numbers were quite good, and our sense is that this trend is going to maintain in this particular month also.
Okay.
And also from that perspective, see, auto numbers will benefit from a number of things. One is you'll see a bit of a stocking of demand because of the festive season, which will get reflected in numbers. And obviously, genuinely, there is a higher demand. And I think with Maruti's numbers also, it is clear that they were sitting on an order book of about 2.8 lakh unit. That is now sort of crossed 4 lakh units. And
Yes.
so overall sense is that there is a pretty good demand, and we would expect higher single digit or lower double digit kind of a month-on-month growth for passenger vehicles. And CV already sort of continues to do well in terms of double digit kind of a growth. We expect to see some bit of a revival in tractor monthly sales because
Okay.
traditionally it's a strong month for tractors. And I think in two-wheelers, some bit of a respite on the export front. We have seen some of the companies like Bajaj Auto struggling on the export front, largely because the African economies are struggling with dollar payment issues. So from that perspective, I think overall we are expecting good set of numbers from most of the players, and I think Maruti's numbers are also clearly step in that direction. I mean, if you look at this particular quarter numbers, you have seen about 10% kind of a volume growth, 2% pricing growth. So top line growth has grown now about 12 odd percent. Margins have been a lot more better than what we expected. So I think overall, auto numbers are expected to come out extremely good for this particular month.
What is your view on the NMDC demerger now that the record date of 28th October is over? So, what is expected?
So one is, our overall valuation was about 135 rupees, and our sense is that the iron ore business will command somewhere about 113 rupees kind of a fair value, and the steel business about 22 rupees per share. Now, in steel, they've already put up a 3 million ton plant, which is expected to be operational next year, and they've already done bulk of the capex of it, about 20,000 odd crores of the overall 22,000 odd crores. And I think if there is a overall improvement in the steel cycle, our sense is that this company will benefit from that aspect. So overall, very positive on this particular front, given the fact that worst is already there in the prices for most of the steel or value-added players in the steel as overall value chain. So NMDC looks very attractive to us. I think it offers a very good dividend yield as well.
Right. Talking about the BFSI space, we had two key banks declaring their earnings this week, Kotak Mahindra Bank and IDFC First Bank. So, what did you make out of the numbers that these banks announced? Is it the time to really accumulate IDFC First Bank?
Absolutely. I think IDFC First Bank, we have raised our target price to about 70 odd rupees. I think they're still sitting on high cost of deposits of about 30,000 odd crores, something of which we'll sort of replace with low cost deposit. And eventually they'll sort of look at lending it more. So from that perspective, this is one particular bank which is sort of doing fairly good in terms of the overall growth, and also will benefit from the shift from high cost deposit to low cost deposit. So from that perspective, we are expecting pretty good set of numbers. ROAs should improve structurally from here on, from 1% to 1.4 odd percent, and that should sort of drive further re-rating in the stock to about 1.75. So we are very positive there. I think Kotak Bank is looking to sort of do more of growth on the high yielding book, unsecured book, personal loans, and which is where our sense is that its contribution will increase from, say, single high digit of this unsecured portion to mid-teens. And that will help them fetch better spreads, and as a result of that, overall growth or quality of growth is going to be better for this bank. So banking in general, we have been liking a lot more with it. So even Kotak Bank looks very attractive to us. Here our target price is about 22.50.
As far as the large caps, IT stocks have been concerned, their results, earnings have been good. We saw some kind of a price moves for Infosys, TCS, HCL Tech happening. What did you get from the earnings of the mid cap IT space? Would you be a buyer there?
I think the way you highlighted, so for example, all your tier ones, IT companies had come out with good set of numbers. I think you cannot say the similar thing for tier two IT set of companies, because you have some
Okay.
companies which have come out with good set of numbers, some are quite sort of struggling. So to sort of highlight a few, for example, Coforge and Persistent are two companies which came out with good set of numbers. I mean, we have seen dollar revenue growth of about in excess of 6 odd percent. Constant currency growth has been 6%. Dollar revenue growth has been closer to about 3.5 to closer to 6 odd percent. There has been a EBITDA margin improvement. The deal value has been pretty good. So we have got buy on both the counters. But there are some
Okay.
stocks which are sort of struggling. So for example, Birlasoft came out with extremely soft set of numbers. We've seen Zensar Technology struggling with growth. The attrition is quite high. They are not able to sort of deliver projects largely because of the higher attrition. So they are sort of struggling. So there are some companies which are clearly struggling, and which is why one needs to be selective. So there is no secular pattern in the tier two IT companies as of now. So one needs to be very
Okay.
selective from that perspective.
Isn't the worst over for IT companies, Pankaj? Because everybody is now saying that it's time to really accumulate good IT stocks.
Absolutely. So I think overall, when you sort of look at, there is an expectation that the global macros will improve. And from that perspective, our sense is that overall IT is a good sector to play that overall revival in the global macros.
Okay.
So from that perspective, I think IT tier one names are looking good. And then, like I said, one needs to be selective in tier two IT names.
How did you see the Reliance Industries numbers? Your target is 2,700, which is not much from the current market price of Reliance Industries. Why so?
Yeah, so when you sort of look at Reliance, I think the refining business continues to remain soft. The refining margins were not much to our liking. I think the only positive surprise is the retail business, where the growth in the last 3 years has been about 19% kind of a CAGR. Overall, this particular quarter growth also has been good. So not much of a big positive surprise. The refining business or the chemical business or the petrochemical business continues to remain a bit soft. So, which is why we are still not sort of too much gung-ho from that perspective. And accordingly, the rating has been sort of hold until and unless we don't see much of a revival, especially in the refining margins, and also on the if we don't see much of a price hike coming because of the 5G introduction. I think the
Right.
telecom business also will continue to sort of remain a relatively drag on the overall Reliance Industries.
This week, FMCG sector did not do well. That was the only sector which ended in red. But the earnings of Dabur India were relatively good. They also announced an acquisition. So, what is your take on companies like Dabur, HUL, in the FMCG space?
I think when you sort of look at some of the FMCG companies, HUL, the growth looks quite optically high at about 16 odd percent, but that is largely pricing led growth. Same is the case with Dabur also. I mean, whatever growth you see of 6% is largely driven by pricing growth. Both the companies continue to sort of witness gross margin pressure. So that's a sort of a secular trend. But I think why we have given Dabur as more of a buy is that there are some categories which are sort of saturated and where growth is not expected. I mean, you look at the hair oil category or the oil category. So these segments are not expected to grow, or even the healthcare or the toothpaste as a sort of a category. But Dabur is looking to sort of foray into categories like, say, for example, with this acquisition of Badshah, they are looking to sort of venture into spices segment, where there is an opportunity to sort of shift from unorganized to organized. So obviously, food as a business has been looking attractive to us, and categories where there is a higher share of unorganized segment, I think looks overall as an interesting proposition, which is why Dabur we have sort of rated as buy. And I think HUL, while overall growth has been there, but our sense is that already all these are there in the prices. So which is why nothing much exciting to sort of chase in HUL at this point in time. So rating remains hold.
PSUs did quite well this week, and we had earnings for Bharat Electronics, which is also a very good defense play. How did you see the earnings?
So defense, I think, continues to sort of good well. So while a lot is talked about the indigenization opportunity, which will pan out for a lot of these defense companies, and Bharat Electronics is no exception to that. But I think what is highlight is, or what is key thing, what we are liking beyond this indigenization theme is the kind of non-defense export or non-defense revenues what they can garner. And
Okay.
that is where we are sort of more excited about. So, for example, they've recently got a deal of about 8,000 odd crore for lithium ion batteries. I think that is quite exciting, according to us, because now this company is looking at not only defense but even other segments which are going to sort of drive growth. I think number-wise, there's very little to sort of complain. They are sitting on order book of in excess of 3 times their trailing 12-month revenues. Uh, uh, we are expecting about double-digit top line and bottom line growth. So that way, I think it's a portfolio stock where we are quite bullish with a target price of 150.
Now it's time for the hidden gem. So, which is the hidden gem that you'll talk about today, Pankaj?
So I think travel and tourism is a sector which is sort of continuing to buzz, and we are quite positive on that segment. Now, in that segment, we like VIP Industries. The company has recently come out with numbers. Typically, when you sort of look at VIP, I think when we sort of look at numbers, the numbers are quite better when we sort of look at from Q1 quarter on quarter onwards. Typically, Q2 is a bit softer compared to Q1. Typically, 75% is the benchmark. So if you're doing 100 rupees of revenues, typically in Q2 it is 75. But in this particular quarter, it was about 85 or 87. So quite better. Similarly, even if you sort of compare it from pre-COVID levels, the numbers are quite good. So from that perspective, top line growth has been good. I think companies are doing a lot of other things which according to us will help in sort of better margins. So, for example,
Okay.
their manufacturing, own manufacturing is going to increase to 70-75%. Currently, it is about 66 odd percent. So they are sort of sourcing quite less from China. I mean, pre-COVID times it used to be 40%. Now it is 10%. So they have improved their margin profile, despite the fact that the share of value products or the lower price product has sort of gone up. And overall, their margin trajectory or the margin expression is quite high at about 20 odd percent. So from
Okay.
that perspective, our sense is that this company is headed towards reclaiming its previous gross margins and looking at far more better margins. They're guiding for about 23%, 2,300 crore kind of a top line. So I think
Okay.
they are looking to sort of grow better top line, better margins, and numbers which are far more higher than the pre-COVID levels or typical traditional ROMs from the Q1 and Q2, whatever metrics we look at. So from that perspective, this company looks very good to us. There's hardly debt on the books. So we are looking at pretty healthy growth rate of over 37 odd percent, though on a stable base. And mind you, we can still get a lot more benefit because a lot of their raw materials is crude based derivatives. So I think
Okay.
all in all, we are quite positive on this company with a target price of about 850.
So the hidden gem for this week is VIP Industries with target price of 850 and upside of nearly 21-22% from the current market price. Pankaj, your last word on what one should do for next week. No, it's a week of full of events.
Absolutely. But our sense is that most of the global negatives are priced in the stocks. And
Okay.
so any kind of a major macro positive emerging globally, I think either coming from Fed meeting or reversal of crude oil prices or dollar sort of declining, I think is going to sort of help Nifty go towards 18,000 levels and beyond.
Okay.
So that is going to sort of help Nifty because we are seeing that a key anchor performer like Bank Nifty is sort of already doing well. So market is headed towards 18,000 levels and beyond, and you'll again see stock specific action next week as well because you have big companies like L&T, Airtel, Tata Steel, TVS, Cipla, Sun Pharma, all of them coming out in numbers next week.
Thank you, Pankaj, for your time. I appreciate it.
Thank you so much.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.